Hey everyone, welcome back to Corporate Financially. Unpack the secrets behind company reports and find out if they are worth your investment. Today, we are diving into National Healthcare Corporation, or NHC's latest quarterly report. And let me tell you, there are some interesting numbers here to sift through. Get ready, because we are about to decode their financial health for the period ending June 30, 2025. Before we dive deep into the numbers, if you enjoy getting clear, straightforward insights from these often complicated corporate documents, do us a favor, hit that subscribe button and ring the notification bell so you never miss an episode. Also, if you want to connect with fellow investors and talk shop. Alright, let's get straight to it. National Healthcare Corporation is presenting its quarterly report, and this is what they've been up to over the past few months. Looking at their income statement for the 3 months ending June 30, 2025, we see their net patient revenues are up to $363 million compared to $279 million in the same period last year. That's a jump of about 30%. For the first 6 months, revenues are also up significantly, going from $565 million last year to $724 million this year. The big story here is the growth in net patient revenues, which in simple terms is the money they make from providing care to patients. This increased by a solid 30% for the quarter and around 28% for the first half of the year. This growth is driven by a few things. First, they saw a slight improvement in the number of patients staying in their skilled nursing facilities from 89% occupancy to nearly 89.4% for the quarter. But what really boosted their revenue numbers was the acquisition of White Oak Management back in August of last year. That acquisition added a significant $56 million in net patient revenues for just the recent quarter alone. Now let's talk about expenses. Salaries, wages and benefits are the largest chunk of their costs, and they've also increased significantly, going up by about 26% for the quarter and 25% for the first 6 months. This is largely due to that White Oak acquisition, but also reflects the ongoing challenge of hiring and retaining healthcare workers in the current market. However, NHC is making some headway in reducing their reliance on expensive agency nurses, which is a positive sign for controlling labor costs. Other operating expenses also saw an increase, largely due to the new facilities from White Oak coming online. But it's important to note that the company also recognized a gain of about $3.6 million from contributing land to a new limited liability company. This gain helped offset some of those increased operating costs. When we strip out some of the non-cash items like unrealized gains or losses on investments and other one-time events, NHC's adjusted net income presents a much brighter picture. For the recent quarter, adjusted net income jumped by a whopping 65% compared to last year, and for the first 6 months it increased by over 63%. This jump is thanks to that improved occupancy, better per diem rate, acquisition 5 to increase by over 63%. This jump is thanks to that improved occupancy, better per diem rates, especially from Medicare and Medicaid, and the positive impact of the White Oak acquisition 5% compared to last year, and for the first 6 months it increased by over 63%. This jump is thanks to that improved occupancy, better per diem rates, especially from Medicare and Medicaid, and the positive impact of the White Oak acquisition. Now looking at earnings per share, basic earnings per share for the quarter were $1.53, up from $1.74 last year, but that dip is due to more shares being outstanding because of stock options being exercised. Diluted earnings per share also saw a decrease from 1.73 to 1.52 per share for the quarter. This is a common occurrence when a company grows and has more shares out there in the market. Moving over to their balance sheet as of June 30, 2025, NHC has total assets of about $1.56 billion and total liabilities of about $536 million. This means they have a pretty solid financial footing with more assets than liabilities. Their cash on hand has increased nicely from $76 million at the end of last year to over $110 million now, which is a good sign for their short-term financial health. The company also holds a significant amount in marketable equity securities, which are basically stocks and bonds that they can easily sell. These total about $146 million, and a big chunk of that is their investment in National Health Investors, or NHI, making up about 70% of their equity holdings. That investment is going well, with a significant unrealized gain of almost $90 million on that position alone. Their long-term debt stands at about $102 million, which is down from $129 million at the end of last year. They also recently secured a new credit facility worth $200 million, which gives them flexibility for future growth and operations. One really interesting comparison NHC provides is how their skilled nursing facilities stack up against the industry average, based on the Centers for Medicare and Medicaid Services 5-star quality rating system. NHC has 80 skilled nursing facilities, and a remarkable 60% of them are rated 4 or 5 stars. That is significantly higher than the industry average of only 35%. Their average rating across all facilities is a solid 3.7 stars, also well above the industry average of only 35%. Their average rating across all facilities is a solid 3.7 stars, also well above the industry average of only 35%. Their average rating across all facilities is a solid 3.7 stars, also well above the industry average of 2.9 stars. This suggests NHC is doing a good job of providing quality care, which is crucial in this industry. Now let's look at the story behind the numbers for the recent quarter. Compared to last year, NHC saw a 24.7% increase in net operating revenues and grant income, which, as we discussed, was boosted by that White Oak acquisition and better patient numbers. Overall, their financial performance is improving, showing that their strategy of acquiring and improving facilities is paying off. For the first 6 months of the year, revenue growth was about 25.2%, again driven by acquisitions and patient volume increases. Their adjusted net income saw a very impressive 63% increase. This shows really strong operational execution, especially considering the challenges in the healthcare labor market. The company provides what they call non-GAAP financial measures. These are essentially adjusted numbers that try to show the ongoing health of the business by removing things like investment gains or losses and other one-time events. For instance, their adjusted net income for the quarter was $25.7 million, a big jump from $15.6 million last year. But when we look at the GAAP net income, which includes those investment fluctuations, their net income attributable to NHC stockholders actually decreased slightly to $23.7 million from $26.8 million last year. This highlights how those market fluctuations can impact reported earnings, even when the core business is performing well. NHC's cash flow from operations for the first 6 months of the year provided over $102 million. That's a healthy increase from $60 million last year, which shows the business is generating good cash. These operational funds, along with their cash on hand and available credit line, indicate they have enough money to cover their expenses and invest in future growth. When we talk about market risk, it's basically the chance that the value of their investments could go down due to things like interest rate changes. Their investments are doing okay, but they are heavily weighted in a single company, National Health Investors, making up about 70% of their equity portfolio. That concentration is a bit of a risk. If NHI faces challenges, NHC's investment value could take a big hit. So what's the final verdict on National Healthcare Corporation? They are showing solid growth driven by strategic acquisitions and improved operational efficiency. The quality of their facilities is indicative of advantage. However, their heavy reliance on the performance of a single investment in National Health Investors is a point of concern that investors should keep in mind. Despite those market fluctuations, the core business looks strong. They are managing their debt well and generating good cash flow, which puts them in a good position for the future. What do you guys think of NHC's performance and that significant investment in NHI? Let us know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more corporate deep dives. And hey, join our Discord community, linked in the description for more great discussions. Thanks for watching. See you next time.